And action. Friday, July 1st. How's everyone doing out there? It's Jeffrey Cohen, investment advisor representative, active tweeter, strong blogger out there, and is providing information, non-discretionary investment information to those who can pay for it, to those who manage large amounts of money, to those who want that edge in the market, that edge, data-driven. So here's the thing. I got to tell you, I'm feeling a lot less data-driven today and a lot more green. Green is good. Green markets are going up today. I've decided, without any data to support it. I put a green shirt on this morning. So there you have it. I've finally gone over the edge and have decided markets are going up today. It's going to be a great day in the markets. Friday, all the fun people are coming out and they're just going to buy a whole bunch of stocks, especially downtrodden stocks, penny stocks. Those penny stocks are going through the roof. But let me start off with some output from our model from last night. So our model, you can actually hear the server because I had to rerun something this morning because I just can't believe it. Now, it's not going to do anything now. Rerun it, but I'm rerunning it anyway because I'm in shock. So let's talk about it. So these are the individual best stocks that our model found of companies that make a profit. So these are profitable companies. Generally speaking, you also notice they have positive cash flow from operations. So these are the money makers. If you bought these stocks, you'd feel pretty good about things because you're getting some solid companies, right? You're getting money makers. The problem is, let's go into it. We worked on our model a lot yesterday. I don't like what the market's telling me. So when Amphenol and Welbilt are on top of the game here, so Welbilt is a 2% expected return stock, which traded 354% of average trading last year. So I just want you to think about this. Coherent is a 3% return stock that traded 346% return. I just want you to imagine, it's like the Harry Potter movie, and there was an Akame, and this is a bird that expands to fill the space, and it shrinks down to the space available. So the Akame grew when it was let loose, like in the UK equivalent of Macy's on Fifth Avenue. And then it shrunk to a teacup. And so I want you to imagine Coherent and Welbilt spreading out and growing to take up investor money that wants to be in low-risk assets. So our model has Welbilt at 2% return, Coherent at 3% return. I can't believe PNM Resources. This is New Mexico's public utility company. Ames National Corp. I don't know what they do. Now, Crestwood Equity Partners is interesting, and it looks like it's the preferred. Who cares? Sanderson Farms. Hot. Timberland Banking Corp. Timberland Bank Corp. I looked at that, actually. Bank of Princeton. Territorial Bank Corp. So when the model starts putting banks in the top, it's interesting. Now, the two of the top 4 stocks are Apple and Microsoft. Now, we know why that is, because the model is looking for risk return, and my guess, I'm just going to pull one up. Microsoft and Apple. You know what? I'm going to pull them both up. Close these ads. These ads are awful. Microsoft. Full screen. We're going to compare it to Apple because I'm hoping that they're the same shape. That would make this hella easier. There's Apple. Oh. First off, it's beautiful that they have the same shape. I didn't actually know that was going to be quite that Just leave it 90%, right? Instead of 4 hours, we're going to go weekly chart. And you can see the lines. I drew lines already. The trend lines are below it, which is it's not helpful. And these stocks are just dropping. Dropping. And so let's go 5 years. Let's get rid of the lines because the lines are disturbing at 5 years. So these stocks, basically Apple, Microsoft, a little bit of an exaggerated sense, but they're kind of dancing the same tune, right? And so you look at that, and my guess is if I were to compare that to the spider, and I were to make the spider purple. So these guys have a lot of beta, a lot of power, right? Market goes up a little, they go up a lot. Market comes down, they come down a lot. So, risk to the upside, which is nice. Risk to the downside, starting to even out. And so this is what our model is saying is safe. Now, it's not. It's good that the risk is coming down. That your upside risk is basically being counteracted by your downside risk. And you can see the up and down swings are just troublingly traumatic, right? So Microsoft and Apple are never picked in our best outcomes. They're not in the model portfolios. They're not in the suggested low risk, high return models. But as an individual stock to hold, the prices are only down 12, 13%. The volume is up. Expected return is quite high. Because if the market turns around, Apple and Microsoft have a history of that dramatic kind of over pronunciation of the market moves. Now you see Alphabet dropped. Alphabet used to be much higher up there. Some other ones to point out. You got BlackRock, Berkshire Hathaway. Good risk return. You can earn 4%. Volume at 98%. It's down 9%. Getting a little discount there. And then you're looking through this list and you're thinking, all right, at least I know the names. The model used to pick really weird small companies. We didn't change that much. It's just picking differently. So then the other thing I wanted you to see, I saw this. I didn't even look at the market. I put on a green shirt. I don't even know if the market's going up today. It almost doesn't matter. So I looked at this variance of the S&P 500 at 1.57 times 10 to the negative 4. It's actually down a tiny bit. Okay. So, but it's still very high, historically high variance. I look at the returns and these are just straight return excluding dividends. We know what the dividends are, so we can adjust it for you. So S&P ex dividend down 11%. It's down about 10%. The IWM, the Russell's down 25% because it peaked earlier, flatlined, and came down. You saw it in those stocks I showed you. You saw it in the stocks I showed you, right? If I were to show you, see how it came up and it came down. Well, the IWM was more flat. It flattened for like 6 months. So it's just interesting. We don't need to keep that up there. And then the QQQ is down 21%, pays about 1% dividend, so figure it's down 20%. So think about that. The NASDAQ, the future of America, the tech stocks. Yeah. So now, these are stocks that don't have a market cap when they were checked. And so we went through, and most of those are business development corporations, and we have now removed those from our model. So we work with Intrinio, good folks, and these are, it's just interesting. We're going through and let's make sure this is the right one. Yeah, June 30. And we're just finding a bunch of garbage in here that we got to fix. So that's okay. It's just in the data. We're at like 1%, 0.5% stuff to go through every company and make sure every company is a good ticker. Every ticker is a company and not an synthetic investment vehicle on other tickers. So while we're here, so what do I have up on the screen? I've got the spider which is not bad. It's actually not that thin at 375, almost 376. QQQ at 278, and the IWM at 168. That was pretty much where it was yesterday. We see no difference from yesterday. Market looks pretty good. I'm wearing a green shirt. That means market's going up today. Feeling good about it. That's about the only logic. If you look at the overall portfolio, so these are all the money makers. There are 2020. We pulled out about 85 business development corporations yesterday. They're just taking up space. They're not real companies. I mean, they're companies, but they're companies that bet on other companies as opposed to inherently independent companies. Did not change the variance. So BDCs do not change the variance of a distribution, of a sample. Expected return if you held all the stocks is 4.76%. Now, for those who have followed our show, and by the way, thank you for watching. We're not paid to make these videos, so hit the subscribe button. That tells YouTube to share our message. Leave a comment below. We like that. Helps. And we're not paid. We don't have a subscription service. Everyone is a premier subscriber. Everyone gets everything. We're not going to charge you to watch our show. We're not going to charge you to read our tweets, and we're not going to charge you to read our blogs. We write our blogs to help ourselves, to think, and to get people to collaborate with us. So, to come back, the risk-free rate is 1.5, and I was thinking maybe that was too high. Maybe that's a mistake. It's not a mistake. If anything, that risk-free rate is going up. I found a bank that'll give you 1.6 on a money market. Now, it's the crappiest bank that you ever heard of, but who cares? It's 1.6, it's FDIC insured. You throw $100,000 in there. It's not a big deal, right? The other reason is look at the 1-month Treasury bill yields. I know I'm jumping around, but this is super important. 1-month Treasury yields is 1.25. I mean, that used to be the best bank account in town. Let's look at it. Over a month. Over a year. Look at that. You know what that looks like? That looks like a dollar stock, a penny stock that got memed. Except it's a 1-month Treasury bill yield. Looks like a meme stock. You don't think that's going to keep going up? This is what the Federal Reserve Bank has been trying to do, is raise short-term rates and let the market raise long-term rates. So here you have it, folks. We were at 0 interest rates in March. February 25th, you were at 0.25%. This is worth something in our blog post. Look at that. 0.025%. And now I shiver in horror. The 1-month Treasury is at 1.25. 1.25. That's going to destroy civilization as we know it. Okay, maybe I'm being dramatic. It's not going to destroy civilization as we know it, but it sure does, make for interesting quotes on occasion. So let's keep going. So after we clean the data and after we look at the variance of the overall population, which is flat. 1.6 is really high variance, but it's not getting up anymore. So I got the best stocks, I got the worst stocks. These are individual, this isn't the portfolios. I got the smallest average trades. Groove and Good Time restaurants. You would think Groove and Good Time restaurants would be popular in this time of trouble. They only traded 2% of last year's average volume. Come on, man. Oh, Manning and Napier traded 725% of last year's volume. And Franklin Covey. I had a dream. I can't believe I'm going to say this on a video. I had a dream that I met Mr. Franklin or Mr. Covey, the CEO of Franklin Covey. So my wife's a really good project planner. And I guess either it was Franklin or Covey was going to offer her a job. And so I meet him, and I said, I know you've got a lot of competition. I go to Dollar Tree, and they got all these planners. And actually, I buy Dollar Tree planners. Let's see if I have one here. I don't. By the way, I got a Faraday bag. You know what a Faraday bag is? You ever want to take your cell phone and make it disappear off the grid? Put it in a Faraday bag. Nah, nobody knows where my cell phone is. I could put it on an airplane. Have it anywhere. Doesn't matter. Ship it. It's gone. It's off the grid, right? So I meet the CEO, Franklin Covey. We start talking business. And I told him he's got to figure out how to compete. So take a look at that. Franklin Covey is, and I swear to God, this was like last night or the night before. I woke up thinking, why am I meeting the head of Franklin or Covey? But now the stock's trading at 700% of last year's average volume. What's going on? Like, why would you do that? Who's trading Franklin Covey? I mean, my grandfather probably used Franklin Covey, right? What are you, retarded? Like, what are you doing? People, what are you doing out there? Franklin Covey? 700% yesterday. So let's take a look. Oh, jumped up. Franklin Covey, green shirt. Now you know why. It's going up. It's up on high volume. So if you're a momentum trader and you had a model, you'd be like, oh, I got to get some of that Franklin Covey. Personally, I will never say that. I don't know. It's interesting. But Oasis Petroleum traded high. Whiting Petroleum traded high. And then Rattler Midstream, they're up. That's okay, though. But it's interesting that the oil and gas and the pipelines are up in terms of volume. I'm not talking up in price. I'm talking up in volume. Greene County Bancorp, up in volume. We've looked at that, by the way. We know a little bit about Greene County Bancorp. If you ever want to collaborate on regional banks, shoot us a call. You know how to reach us. You go to the website, chicagoquantum.com, and you call the number. Call the number on your screen. Operators are standing by. And there's other banks in there. Esquire Financial. That one's interesting. You know, Esquire, well, 371% of last year's volume. I think Esquire has one branch in Jamaica, New York. Now, what the hell do I know about Esquire? Well, I know that they trade at a fabulously rich price to book value. And it's up. And so I thought that maybe that was because they were going to have like an acquisition, that somebody wanted like a private banking branch. It wouldn't be a bad thing in New York to have a private banking branch, like a Harris Bank of Chicago, but in New York with one branch. Was it up yesterday at least? Well, it looks like it was down, but it was up a little bit, but it wanted to go up, and it did that thing where the candle with the thing that points up, it's trying to go up, but it just couldn't hold on. So there's a lot of movement here. There's a lot of movement. But this isn't what I wanted to tell you about. I don't care about stocks that went up and that went down a lot. What I care about is this. So we did accelerate our model. We did run it a little faster, but not like this. So our genetic algorithm, FAST, normally picks the best portfolio. It picked a huge portfolio with an alright score, but not a great score. The best one was an exhaustive one. Now these are taking a long time. They're taking 25 minutes each for these solvers to run. So it takes a long time. So what's happening is the data is not giving a clean answer. Then you got our seeded Monte Carlo, and I ran it for smaller portfolios to save time. And it gave just a downright terrible answer. Then I ran a Monte Carlo again. I seeded it, ran it again for 40 minutes, and I got a terrible answer. And then I ran unseeded, again, smaller portfolios. I just had a feeling maybe the market, maybe there would be like a smaller portfolio you'd want to grab onto and you'd want to buy or sell. Terrible answers. And it ends up, we do a reverse simulated annealer on it, where we start, we actually start cold and we go hot. Didn't change the answer. And then we ran genetic algorithm on it hard. for 21 minutes and effectively got the same answer. So our best portfolio, so our edge used to be 6 times 10 to the negative 4. So variance is 1.5 times 10 to the negative 4, and you've got a 6. You got 4 times variance. That's probably a good way to, I'm going to write that down. That's probably a really good way to assess the value of our edge. It's variance of the population. And then under, and then over would be the edge of our model. Because they're equivalent in terms of their metric. We do that. It's all kind of a factor of variance. And so if we're at 1.33 minus, and you're at 1.66, I don't remember. It's close enough for government. Then our edge is less than 100%. That's not a great edge. That's not a great edge. And I'm not happy about that, right? And so your minimum, so your Leptokurtic low variance stocks, if you want to play some options, I mean, you can always play P&M. It probably doesn't even have options, or it just trades for like a penny. Verizon's not been moving. Verizon has been surprisingly stable through these times of crisis. Always take a look at Corbis. You know, we love Corbis. Corbis never moves. Do you know I'm going to buy a scuba diving outfit? And that's what I'm going to be for Halloween. I'm going to be a scuba diver. I'm writing that one down too. And you know what? I'm going to have Corbis's ticker on my chest. Because I've been underwater for so long that I need a scuba diving outfit just to breathe. Yeah, so let's take a look at Verizon. What's Verizon been doing? It is Leptokurtic and it is low variance. Well, first thing to look at is $50.74. It was $50.74 not that long ago when I was trading it before. I made so much money on Verizon. It was crazy. It's a great stock to make profits on options if you're just learning how to trade options. Because if you look at the downward trend of the market, it was $61 in early 2021, late 2000. Take a look at this. This will teach you that the market is rational. I don't care what people say. And it's not an irrational market where people overvalue dividends, because I don't believe that happens. I believe that dividends are just a means of distributing returns, and it's not magic. It's not magic. So let's look at it. Verizon was trading up and down around 55, bounced up to 60, came back to 55, tried again to 60, back to 55. That almost looks like a head and shoulders, but I don't think it is. I think what this is it's just a stock that's not going up. So 61.55. Now I hope you didn't buy it then. Or you could have bought it a year ago for 62. But so this thing's been in downward decline. So it hit 50. I remember thinking, oh my God, 50. This stock, I love it. This was when the FAA, Federal Aviation Administration, didn't allow Verizon to put 5G by the airports. That was the news that drove it down like $2. So we rode that stock up like $3 and we made just a mint. Then we went ahead and we lost a ton of it on speculative stocks in January like everybody else did, but that's fine. So now it hits 55, it comes up to 53, it's down to 46. We did not play it at 46. 51, 49, 50, 70, you know, it's crazy, right? So this is a stock with very little variance and small moves. It's not moving, and that's okay. So if you're an options trader, you're banking premium on this thing, right? I mean, because it doesn't move. You sell the risk. You earn the premium. But there's other ones. Hershey's, Coca-Cola, Mondelez. These are good real companies, right? Leptokurtic and low variance. So then you have Leptokurtic and high variance. And we need to take a look at that because that's going to be a little bit crazier. So this is LPI, is Laredo Petroleum. LPI. What is Laredo Petroleum doing? So we go back over a year. Yeah, if it was a dog, it would have a lot of shaggy hair. Look at that. $7.50, $8, popped to 100. And then it came down. So this thing moves. It moves fast and hard and up and down. And so it has a lot of variance. It has a lot of movement. You rode it up to 88. You know, you could have bought the thing at like 8 or 10 or 20 bucks, 10 bucks, 80 bucks, 40 bucks, 37 bucks, 90 bucks, 57 bucks, you know, just up and down. So Laredo is crazy risky. Very much movement, a lot of movement. So that's a good example of a Leptokurtic with a high variance. You don't know what you're going to get. It's fast mover. It's hairy. It's hairy. That's what that is. So, you have some choices out there. You can do your options bets on the Leptokurtic and really ride the wave. You could actually hope that people don't know a stock is Leptokurtic and high variance and that the option prices are cheap and then just make a mint that way. Or you can go with the old tried and true Verizon and the Leptokurtic stocks, which are going to have, you know, rather small movements, safe bets, don't move very much, and then hope you can catch a move. You know, catch a break, right? So at the end of the day, what did we find? We found a lot of stocks. You have to pick and hold a lot of very risky stocks to get an edge in this market. I mean, I'll tell you what these companies are, and don't worry, you won't get blocked and reported if you text about it or if you tweet about it. So what are these companies? These are, it's crazy. AMD. It's chip stock. BX. BlackRock. Coinbase. Dillard's. These are some names here that you've heard of. Right now, Dillard's is closely held through the family. I don't know Ebix and FTNT. Melli is Mercolibre, MXL. I don't really know what they do. Then you have Nvidia, which of course you know. B. Riley. Anyone who's in the penny stock pumping business knows B. Riley. SCU, I think that's another money manager, small money manager. SGRY is a surgery company, surgery equipment. SI is Silvergate. They invest in Bitcoin companies, Bitcoin miners, and they lend them money. SITM is SciTime. It makes the chips that tell the time in your computers. And TTD is the Trade Desk. And the Trade Desk is the company that decides what advertisements you're going to see. So sometimes if you go to a website, I was looking because Yahoo Finance normally has these. Here it is. So this ad up here by Ad Choices is probably from Trade Desk. I just think it's interesting. Trade Desk provides the ads. So, all right. So that's a lot of new economy stuff here, right? Coinbase, chip company, online advertising, Bitcoin lender. Bitcoin miners aren't here anymore. You got a big investment bank. You got a big chip company that made a chip from a laptop we bought 10 years ago. Nvidia, right? They make the graphics cards. They also have something to do with Bitcoin. B. Riley, pump and dump, baby. SCU, I just can't remember who SCU is, but you'd have to hold all of those evenly And if the market goes up, then they go up. If the market goes down, they go down, but hopefully over time they outperform the S&P 500. That is the intent of that model and that run. So a few more things to look at. One is, this is FINRA's site, FINRA Market Watch. We love FINRA. FINRA actually regulates us as an investment advisory company. And so TRACE is the way people report bond trades, and these are corporate bond trades. And you see that advancers yesterday beat decliners 2-1. It was a good day in the fixed income market, except 35 new highs and 1,169 new lows. That's about 35-1 new low to new high ratio. 52-week new lows to 52-week new highs. And you can see in the high yield, it was 8 new highs and 655 new lows. In the convertibles, 1 new high, 35 new lows. So not a good day for fixed income. Let's take a look at FinViz, see if they still have it up. They do. 25 new highs yesterday for equities that they follow, which look like mostly their U.S. equities. 25 new highs, 896 new lows. So that's about 36-1 low to high ratio. So it's interesting that fixed income 35-1, equities 36-1, new lows to new highs. So it's not a stock picker's market. Don't catch a falling knife. Fear of missing out is a good, cost-effective strategy. Be afraid to miss out. It's okay. You're getting a lot of new lows. That means the guy yesterday that bought the stock, or the lady yesterday who bought the stock 3 days ago, probably had a new low. Probably could have bought it cheaper today. All these stocks probably could be cheaper in a week or 2 weeks. So if you like stocks that are new low kind of stocks, just stay away from them. Just wait. Wait it out. Look at BBIG. People really thought that was going somewhere. By the way, I'm sorry, laid back, because I know you're quite a quite a guru in the stock market, and you were pumping BBIG a while ago. Vinco Ventures, I think it is. It's crazy. All right, let's go back. See how the Treasury yields are doing. 1 month Treasury bills are at 127. What's going on here? 1 month Treasuries are at 127. So if I think about that, let me try to play this out in the economy. So short-term money gets very expensive, right? Money I need now. Pay a mortgage. Pay a bill. Maybe margin. Gets very expensive. So I won't be able to do things now. Money later on? 10-year Treasury notes? Cheap. 2.9. 2.9 and a quarter. That means that money that I don't need now and I want to put it away for a rainy day, I want to invest it, there's nowhere to invest it. There's no factory to build. Right? There's no startup to fund. I'm going to give it to the government for 2.92%. Look at those yields dropping. So it tells me that people don't really care. Now, the other thing that could be happening with the 10-year, because the 10-year is the currency of federal open market transactions. It is the thing, the collateral you use when you want to do business with the federal government on the reverse repo market. And so 10 years have a special place. Yields could be going down because the price is going up, and the price could be going up because the Fed's actually buying more. And individual investors and big companies and investment banks are buying more 10-year treasuries. They're buying the treasuries because they don't know where else to put the money. The 30-year treasury at 313.6, bouncing a little, but that's also pretty low. That's real far out. So you've got an interesting thing going on with the yield curve. The yield curve, I bet you if we were to look at 2-year and 5-year, it's not a nice, gentle, upwardly sloping curve, is my guess. What else are we going to take a look here? I don't care about top news, but Koyfin, I do like the charts on Koyfin. So it looks like the VIX, when the market was looking healthy, it was going up 2.5%, the VIX came down. It was as the market started to fall that the VIX came up. And now the market is falling and the VIX is falling. That's just on the chart. It fell yesterday. I don't know. Look at that. Where are we at with the VIX? It's probably worth looking at for a minute. I like looking at the VIX. I think you divide it by like 19. Make it a percentage. 19.2, I think it is. And then that is effectively your standard deviation of the market moves. I'm not sure that that's right, but it's close enough for government. So 29.05 divided by 19.2 is 1.51%. So it's protecting you on 1.51% moves, plus or minus. So within 1.51% move for the S&P 500 in a day, 68% of the time. I don't even know if it's right. It might be right. It sounds right. So you take a look at your S&P 500 and you say, all right, well, how many days did I have a 1.5% move? And actually, it's been going up a lot. It's been moving 1.5% a lot, often. So taking a look at the markets, let's see what we see here. We see crude at 109. It's down, which is helpful. Gasoline at 361. It's down. Now, it's up 8 cents today. So I guess you should run out and get gas yesterday. Use your quantum computer, turn back time, buy the gas yesterday, because you're paying 8 cents more at the pump today. I'm amazed that the 30-year bond has gone up so much. This thing was going to hit 130, and now it looks like it's fast approaching 140. So the 30-year bond at 139.22 is very high relative to where it's been. You're kind of touching a point when it was late May. The 10-year at 119.20 is touching that same point. It's almost like a resistance line it's coming up to. The 5-year, the 2-year, these guys are all coming back up. It looks like they were all oversold or driven down in mid-June. And so that's interesting. Right? Because rates went up when the Fed said that they would raise interest rates. Now, people are either forgetting about the Fed, or they think there's a recession, or they're not sure. And so the bonds are going up and the yields are going down. Okay? So this says the Nikkei was down 1 2/3%, and European markets are down. I don't know. We're going to check a different source for that. And the U.S. equity futures are supposed to open lower. Silver broke below 20 at 1953. Gold broke between 1800 at 1786. That's actually pretty bullish. Copper's dropping. Now, copper dropping is a recession call out, except that oil's going up. And so those are in conflict right now. But copper dropping to 357.70. You know, copper has traded historically around $2. So copper has a long way to fall. And Freeport-McMoRan, FCX, is the largest miner of copper. And so you see Freeport-McMoRan actually looks like it's in a head and shoulders, according to FinViz, and is actually dropping through the floor here at 29. It was recently at 44. It's fallen from 50. I don't know how low Freeport-McMoRan can go, but considering that copper is at 357 and could go as low as $2, Freeport-McMoRan could go to $5, $10. Depends on their cost of mining. And you know, costs are going up as labor goes up and energy goes up. You need energy to mine, and you need people to mine. So what else is interesting? Bitcoin. Bitcoin at 19,292. Bitcoin just hanging on at that 20,000 level, right? It's formed a new support level, a new base at 20,000. Oh, while we're watching, the S&P 500 is up 376. The Russell is staying about flat. The QQQ is up a point. So yeah, I think it's going to be a green day today. The Japanese yen at 135 and a quarter. The euro dollar at 104.18 is interesting. So the euro dollar, so what this means is how many US dollars does it take to buy 1 euro? It takes $1 and 4.2 cents. So if you go to Europe and it's €5 for a sandwich, it's $5.25 for the sandwich. It's not so bad. I remember going when it was like $1.40. I am not spending $7 on a sandwich. A €5 sandwich was $7. I hated myself. I couldn't eat over there. I really couldn't. I went to the store and I bought bread and I ate bread because I couldn't afford a sandwich because the euro dollar was so high. Now at $1.420, I'm going to buy all the sandwiches I want. I might even buy some of that French nice cheese they have and wine. Maybe I'll go to Europe. I'll go to England and I'll buy overpriced lunches. I like that. So the food is so expensive in England. It was awful. In Scotland you get some good food, but not England. It's terrible. So I digress. So the model has very little edge. Momentum trading is going to require holding many, many more stocks with a much smaller edge. You've got new lows just dominating, 35, 36 to 1, both in fixed income and equities. You got the 1 month treasury yield through the roof. You've got the VIX suggesting a 1.5% daily move for the S&P 500. You get the 30-year climbing to 140, which is healthy, which means that long-term rates are dropping while short-term rates are rising. You've got certain economically sensitive commodities like copper dropping, 358. It was 357 a minute ago. You got silver dropping. You got gold dropping. Okay, that's interesting to me, right? And then you see the futures are down. Not sure I'm buying it today. I think this is a head fake going the other way. One last thing. How are we doing with the COVID? I think it's important that we look at the COVID numbers and see is COVID having an effect. So last time we looked, we were about 4,300 new hospitalizations. We're at 4,900 new hospitalizations. So they're creeping up. And you've got moving average 110,000 new cases. So you're running about 4% hospitalizations on new cases. You can see it's not really a factor, but it really hasn't gone away either. So there's a little bit of a pull. And your CPI numbers, just as a reminder, your non-seasonally adjusted or seasonally adjusted, it doesn't really matter. It's looking about 1%. 1.1% a month of inflation and 8.6% on the year. So no matter what happens out there, if your assets aren't worth 8.6% more than they were last year, you're losing money. Remember that number, 8.6. There you go. And so if your stocks are down 8%, 7%, 8%, and your inflation is 8%, you're down 16%, you're starving. And so the equity market is not a safe place right now. Be safe out there. I want to thank you for watching. Nothing's really happening today. Today's kind of a boring day. And I think it's going to be green. Thanks for watching. hit the subscribe button. We're not paid to make the videos, so when you hit the subscribe button, YouTube tells people about it. We don't advertise our videos, so it's just natural watchers. And drop a comment. I like that. I'll respond to it within maybe 24 hours or so. You take care. Be good out there. Bye-bye. God bless you.